Good afternoon traders, and welcome to this Axia stream where we're going to be reviewing my execution over the European PMIs which occurred on the 22nd of November. We're mainly going to be looking at the bunds here, but for those of you that aren't too aware, the way that the European PMIs come through, we get the French numbers at 8:15 in the morning, then at 8:30 we get the German numbers, and then at 9 o'clock we get the European numbers, all of the individual components. So a good one to trade in that we see various patterns based on how the market reacts depending on the first number into the second number, and there's various different execution strategies that you can apply to trade off the back of these. Now what we're going to look at today is one where the initial pattern somewhat tied into what we'd seen in the past, and then the reaction was so kind of obscure and different. There was some real kind of key identifiers that this was potentially going to be one that didn't react as expected, and as such there were a lot of traders trapped, and there was a really fast squeeze, pukey move as a result. So when we come through to look at my execution, it's not one that I executed with a lot of size, but admittedly trying to kind of work on different sort of ways I can apply, distributing smaller clips in high volatility conditions to get a better end result. So, not to say this was the best execution you've ever seen, but for my personal part, although the end result wasn't amazing, based on the fact of how the market reversed, it was pretty good from my perspective of how I executed, and something that I want to carry on working on to develop further. But really just some good insight even outside of my execution as to how you can kind of protect yourself from getting too heavy on some of these eventualities where your stubbornness can really hurt you badly when the market effectively reverses and goes the way counterintuitive to what you would expect it to do. So quite a lot to get through by way of my preparation and the technical structure going into this. So I'm going to really crack on and try and get to the ladders as quick as possible. So just starting with a bit of background, what we've seen in the prior PMIs. So we've got 1 minute chart of the bund here, and at each of these purple arrows, it indicates each data point as it comes out. So you can see starting here at 8:15 on the left hand side, we've got the French PMIs. Now the manufacturing component is usually the most responsive, but this is in conjunction with the services component, and then there's a composite element which kind of weights the two and gives a kind of an averaged or overall reading. So you're kind of looking at the three of them, but really you're kind of ranking them like first, second and third. But then you've also got to understand that if the manufacturing's out one way, so say the manufacturing's a beat, but then the services and the composite are both a miss, you might have to adjust your execution accordingly. But that's just a bit of preamble so you can understand what's going to be said later on in the stream. So just starting with this one, we can see that it was a miss on all three: manufacturing, services and the composite. So the orange indicates the actual figure, the left hand side indicates the expected figure, and the right hand column, that indicates what the surprise was. So the fact that these are all negative numbers, you can see that they're all misses. So as a result, you expect euro to go down and the bunds to lift higher, to push higher. But as I'm only executing in the bunds, I may use the euro as a proxy market to give you some confirmation of that trade. But we can see that on this occasion in September, it seemed like someone had the numbers early, to the extent that you can see where the purple arrow occurs, which is for this candle, but the market had already gone, only sort of 5 ticks, but I think it was trading towards the lows just before the number came out. So there was a bit of a splash up, then the number came out, and then it blipped significantly up to here before grinding up. And what we often see in the French number is, depending on its results, people start to punt going into the German number, anticipating that it's going to be the same as the French. i.e., if the French is a miss, they think the German's going to be a miss. The German component is a lot more reactive, as larger constituent territory within the Eurozone, and as a result makes up a larger proportion of what we'd see on the European one. So we have the beat on the French, and then it grinds up into the German, and then an even bigger blip on the German. That was a 20 ticks blip before the number even came out, because the number came out here. And then again, a subsequent blip, another kind of 15 ticks or so before a pullback, and it started to go. So the reason it's important to understand this is to understand mainly what happened in this period. You know, the market stayed bullish going into the German number. When that was confirmed, there was another influx of buyers, and this propelled the market higher, probably another 50 ticks or so. And then going into the European number, everything was expected. The fact that we got misses on all three of the German components, you're anticipating then that it's going to be a miss on the European number, and no one really got involved in that situation. When it came out as a miss, no one's really buying that, because at the end of the day, more likely than not, it's going to be people who are already long from the French into the German who are going to start covering on the European. So you can actually get the flows coming in to the counter direction to what you would expect to happen. So now moving on to the October PMIs. This one, you can see we started here, not so much of a blip pre-number, but certainly very difficult to get anything within the first kind of 15 ticks or so from when the number came out. And similarly, it was a beat on all three components. So again, we had fast move down, shallow pullback, and then a grind down into the German number, where what we had here was actually quite different. We had a conflicting result from the German to the French. So the German was a miss on all three components, which is why we got this big fast unwind of all of the shorts that had been kind of punting into the German number. And then when it came to the European number, we're still a little bit in the balance as to how this could all balance out, because yes, Germany was a miss, but not a huge miss. What's going to be the resulting European number after factoring in the other territories, which we don't actually see on this day. But there was a miss overall on the European, and as such we got another kind of 20 ticks move on the European number. So it's sort of showing that when it all comes out as expected, the European doesn't really come into play, but when there's kind of conflicting arguments and the market's potentially a little bit unsure about what the overall European one will be, then that may come into play as well. But also, this is the main thing that I want to draw on. We see a shallow pullback, market holds, and then grinds from the French into the German, anticipating the same result again. Now, not going to show you the result immediately of what happened in the November PMIs, because I think it's better to look at it in the ladder and be able to see how the market kind of reacts, and you probably gain more from it than knowing what the outcome is to start with. Otherwise, you're always playing with hindsight. You're always thinking, oh, well, that was obvious what that was going to do. But just looking at the structure going into Thursday's PMIs. So this is a 60-minute chart of the bund, and it cuts out most of the overnight session. So it's really just going from 7 till 9 o'clock, 7 in the morning to 9 o'clock in the evening. But you can see after this gap up on the 20th, I think there was some US-China news, we carried on moving higher, and then this kind of slow, grindy offer just started to step in where, every time the market bid higher, there was someone willing to step on it and kind of just pushing the market lower and lower. So just something that I had in my mind was that if we were to kind of break this, I know this isn't a perfect trend line, but just to show the broad trend that we were doing, if we were to break above here, my anticipation was that the market could move higher. Saying what I said, I have included, these are the candles that you'll see in the ladders going forward, but I'm not going to show the lower time frame for now. But it was just in the back of my mind that if the market was to start moving higher, there could be an unwinding of this move. But also on the weekly structure, this is the Bund's weekly profile, and I've split it. So this is the Friday morning when the PMIs were going to come out. Sorry, I think I said they come out on Thursday, they come out on Friday. So this is the 22nd of November onwards, and this is everything before. So you can see we've got this quite heavy weekly structure, and it meant I was also looking at anything moving down to potentially test this high volume node, this high volume node, and this high volume node. I think I spoke about it in the debrief on Thursday. But essentially what I'm saying from this is you can't be so kind of stubborn with your view that, oh, this market is only set up to go down, because there's also a counter argument for how it can go up. And that's why, you know, everything that happens in the ladder really unlocked this trade if you're astute to it. I wasn't necessarily 100% astute to it, but I was enough that it meant that, you know, it allowed me to cover my position when it really wasn't going how I expected it to go. So otherwise, just very quickly catching up on what my plan was for trading the PMIs. The first was to anticipate the blip. Now the problem with the PMIs is that, say the market blips immediately down on a beat, it will then pull up, find some sort of level, and then you're hoping that there's going to be a continuation. The problem is you don't know how far it's going to blip, you don't know how far it's going to pull back, and my strategy up to now has been very aggressive, pretty much selling like the best price I can after the blip with big size. But what this means is it's very hard for me to hold my big size as the market's then rotating in this area before it kind of finds some more liquidity, you know, the bid offer, the book thickens up a little bit and it starts to trade out. So my anticipation of that blip today or on this occasion meant that I was willing to work higher number of smaller clips to kind of find the range of the pullback and then work my position from there. It's just something that I've been trying to work on in the higher volatility conditions, just because otherwise you can be in a good position with good size, but you just can't weather the volatility, and you can't afford to go sort of 5-10 ticks offside with good size after clipping just one big clip without puking and then potentially seeing it roll over and go in your direction. So I've kind of been utilizing this strategy, you know, some advice from some of the senior traders at Axia, just to keep me in the trade long enough, which is something that you can potentially use to employ in a situation where you're finding yourself, you know, you're getting in the right side of the trade, but not just being able to stomach the volatility before the move actually kind of continues or trends out or whatever. So looking to anticipate the blip, distribute some smaller clips, and then when I do get some good size on, you know, if you do get a good splash through the extremes on any of these numbers, you know, for me, I want to be getting out a large proportion of my size, and then, for example, from the French to the German, anticipating the punting going into the German number, I want to hold something small for that extended move for the next kind of 15 minutes between the French and the German, with a view to actually probably getting out before the German number comes out, just because I don't want that exposure on the number, knowing how far it can blip if there is a kind of a counter number, i.e. a beat on the German versus a miss on the French, or vice versa. And otherwise, just from a technical perspective, just looking at the upside as a real good potential for more of an unwind, and the fact that we'd been grinding down for a long period of time, a couple of days up to that point. That being said, you can have the situation where it grinds down and then it finishes with a pop, say on a beat on the numbers, and then the reversal on a slightly higher time frame than what we're going to see going forward. So let's get onto the ladders. I've got this queued up, so we shouldn't have to watch too much footage outside of what's really relevant. So I've got this queued up for 10 seconds before 8:15, when the French numbers for November are going to come out. You can see the main ladder that we're going to look at is the bund. We've got this white line here, which I just use. It gives me some reference point as to where the move started. And similarly, I've got one in the euro. So just for this stream, really only want to be paying attention to these two markets, just to keep it quite simple. So in the event of a beat, we should see the euro push higher and the bund push lower, and then vice versa. In the event of a miss, we want to see euro push lower and bunds push higher. Now these are the numbers that are going to come out. So what we're going to see is there's a beat on the manufacturing, which is the most kind of significant component. And it's quite a big beat, a 0.7 beat, and then a small miss on the other two, on the services and the composite. So really for me, you know, that was a green light that the market should, you know, it should offer on this in my case, in my understanding. I know that it's probably going to blip anywhere down to 57s or below, and then it's a matter of finding where the liquidity comes in on that pullback and trying to position myself appropriately. So we're just going to watch this forward and see how I execute. I'm distributing clips of 3 and just working my entry in still until I get that confirmation of where the market's going. So 10 seconds time, you'll see a big move, and also just pay attention to what the euro does as well. So I've seen the number, I've got in with 2 3-lot clips, worked out of a little bit as it blipped down, and now I'm thinking, right, I don't really want to see the market pull back really above where that initial pullback was. I think it was 59s or so. So I'm trying to work in some more kind of clips of 3s, and now just kind of working that movement in the book to try to work myself out. But really in this situation, it's quite a strong position to be in. We see it with our elite Axia trader quite a bit. When he's working his size in, as long as he's on side, you know, you can feel like you're comfortable, you can feel like you're holding the trade. I'm now looking at these 55s as a line in the sand. Above that, if I see kind of the market start to start to move higher aggressively, I don't really want to be holding and just seeing what happens through there, because there may be a lot of people caught short. But as here, we see the euro pushing highs again. So the euro makes a new high. I think the bund makes a high as well. We've got a daily low that comes in at 38s in the bund. So you can just see I'm working my size out, relatively small, but quite controlled at this point. I've never really gone offside, apart from after my first clip, and I was willing to average within sort of 5 prices or so, knowing that my risk was relatively tight at that point. So really from now, as the market starts to offer over, I'm thinking, right, going into the French numbers, my daily level's been taken. I'm only holding 1 lot, but I'm still thinking I'd like to hold a little bit more, and perhaps the market will rotate higher a little bit and then start to grind down going into the German numbers. What we want to see here, what you want to take notice to, is how that doesn't happen. If you refer back to the charts that I showed you of the September and October numbers, despite the fact that the euro is still pushing higher, you know, the bund is going to pull back a lot further than what I would have expected. I wouldn't have really expected it to start trading above these 46s. This little high volume node, 2,300 lots traded. Otherwise, it's starting to show some kind of unique characteristics which don't fall in line with the prior French numbers, where the pullback was quite shallow and the grind kind of carried on for the next 10 minutes or so. But anyway, as we're kind of bidding over here, I'm happy enough to hold 1 lot short, and then maybe just try to work in a little bit more in this area. But I'm actually going to fast forward this now, because this isn't the main part of the execution. So I'm just going to put this to 4 times the speed, just so you can see broadly what happens. But the market the buyers keep kind of stepping in. The euro's not pushing higher anymore. And it comes back to this 55s area where I didn't really feel like it should trade above. And I see some sellers start to step in. So willing to get just another little bit in, thinking, right, perhaps now I could start to build a position using this as my stop, targeting a new low essentially in the bund. So again, not very big size, but quite controlled and quite well thought out for me anyway, with how I was willing to execute. So now I'm thinking, right, I've got a pretty hard stop here. I think I've put my stop there just in case, anywhere above 54s, and try to kind of work the offer a little bit again. But just seeing now, we've pulled back sort of 14, 15 ticks, and we're not rolling over that easily. It's something just, you know, already should be thinking, right, it's not quite the same. Unless we start to offer down now, it's now 22 minutes past. You know, by the time the German number comes out, really, I want there to have been a new low. Not really seen this, so I actually, you know, cut my loss. I've still made money on the trade, and now I just can reset and kind of get ready for the German number. Okay, so this is the German number, and what we're going to see now is my eyes automatically go to the market manufacturing PMI number, and that comes out as a beat, 0.9 beat, again quite significant. So, you know, when the market blips down, I'm still willing to do a similar strategy as to what I did in the French, but really what we want to pay attention to here and really kind of, so I want to put this back to normal speed and really take notice of is what you do in the situation when you think you've sold and you think the market should definitely roll over, and then for whatever reason, the market just doesn't react as you would expect. And I'm going to pause it when it gets to that point where I had a bit of this moment where I was like, I'm just not seeing what I want to see. What have I missed? And it's quite rare that I do that. I've really done my ass on these sort of situations before where I've just held being like, the market's wrong, it's not doing what it should be doing, and really just took a massively brutal loser. But we're just going to see how this plays out before it gets to that moment. So the market blips, just after it blips, I've seen that it was a beat on the manufacturing. So I'm trying to work in on a little flick back to 42s. I get one clip in as it feels like the offer's holding. So I sell, I think 37s, 42s, and then it kind of feels like here there's a little bit of liquidity stepping in. But what I failed to notice, Euro's pushing lower still. I got another clip in, so I'm now 9 knots short, and it's going back towards the scene of the crime, 52s, where the market began. Now at this point, I'm already having feelings like, what's happening? Why is it not going? And I can feel that everyone is chasing this higher because they've all sold the low down here. We've all kind of done the same thing, and it's that situation when there's no rotations lower on a market that you think should definitely kind of bucket out on this. You know, something's not right. Something's definitely not right. The Euro's starting to push higher. And really at this sort of situation, I had a chance just to kind of get out of a little bit more than I did. So this is the moment I was like, I think I said it out loud to someone, I was like, this doesn't feel right. What are we missing? What are we missing? I turned, looked to my, my data, and I just noticed that despite being a beat on the manufacturing, it was a miss, pretty decent miss on the services, and a pretty and a 0.2 miss on the composite. Now, I'm not saying that I felt like I was wrong for hitting that in the first instance, but there's enough there to suggest that, okay, maybe this is just one of those ones that just goes the direction. You've not seen what you've wanted to see on the French, the way that it pulled back and held the higher the pullback coming into the German number. You've now seen a massive blip. You know it gave everyone time to sell in this kind of 32s to 37s area. They're all now 10 ticks offside, approaching the scene of the crime. What do? So my natural instinct is probably to hold and hope that I get filled. But you know when you're being optimistic, and you know when there's people with more size than you have who are chasing this higher and higher. So what I do is I work out of my bund position, and then I actually cut and reverse. And what I really want you to pay attention to is where you can see in this zone the panic in the sellers who are caught short and just having to start puke their positions. And when that happens, the extent of the move is always going to be over exaggerated against you know, those participants, and you can target some really good kind of reference points. In this situation, the high of the day, which is I think about 70s or something like that. It might seem like it's quite far, 20 ticks away, but when there's so many people trapped who need to get out of those positions, you can get these real quick flushes to the upside, which is what we're going to see now. You know, so at this point, I could already start working out this trade. I know that I'm kind of wrong. I'm starting to bring my bids a little bit higher, but could just be doing that a little bit more aggressively, maybe with threes, laying bids with threes. If you get hit on a couple, you're in a pretty good position. But you can see now the bids starting to step in, some bigger clips coming through, people starting to panic. And really, if it trades back above these 55s, which is that reference point from the French number, which we just saw before, if it trades up against there, that's my kind of line in the sand where it already doesn't feel like it's right, but you know, we've pulled back 20 ticks from the low now. You know, this is one of those ones, this could go a long way, trade out the high of the day at 72s, and I don't want to be the last person left holding this situation. So I've kind of accepted defeat on these fills here, but just haven't had time to get them out yet. You know, I'm only 3 lots long, but getting rid of those. But really at this point, I know that really I'm the wrong side in the position, and there's still not been that big pukey flush that you would anticipate from all the people who are kind of still holding onto the dream by selling in this area that the market might roll over again. So you can see now as we start to trade through the 55s, you know, euro comes back towards the scene of the crime. And really at this point, I'm not getting filled passively on any of my bids, which means, you know, people are chasing. So cut and reverse my position. Now 3 lots long, adding into 8 lots long. And now I want to see a quick flush up through these 72s, but still willing to work my price. I don't feel like until those highs go, we should really see the market rotating back down towards these 55s. And really this was an opportunity to get even more size away. You know, I did all right, as in I made back pretty much what I'd lost on, you know, the loser selling the number, or maybe not quite as much, but factoring in the French, you know, I was a little bit up at this time. But really just knowing that that high has to go. It really feels like there's still more people who have to puke. You want these sort of moves to finish with a nice little pop, and you can just sense that people are caught short and really not enjoying it at the moment. And again, worked myself in a pretty good kind of pretty good average entry, to the extent that, you know, I never had to feel any heat, which just enabled me to hold on to this trade a little bit more. Part of the upside of distributing your clips a little bit is that if you're understanding where the liquidity is coming in and where the bid's holding, you know, your average price, it shouldn't be too bad. And if you do flick on side a few ticks, you know, you're in quite a good position for, as people start to step up, 600 lots chasing higher. You know, I've carried on adding into this position as I'm working a bit out, back up to 9 lots. It's just flicked up through the high of the day. And surprisingly, this is more an unwind in the bund in hindsight looking back, because the euro didn't really trade that much below its opening price. You know, I had thoughts after extinguishing my the majority of the size that I had in to get a little bit more in, and then I just thought a little bit better of it. I thought, wait a minute, let's just see. The chances are this is probably going to pull back before going. But I also had in my mind, if you refer back to that 60-minute chart, not only do we have sellers caught in this trade, but then there's also higher time frame participants who may have set their stops above one of those swing highs on that 60-minute grindy chart. And I think the trend line came in around this sort of area. I mean, it's not exact wherever you think it's coming in, but where do you think the point is where people are going to start working their long, or working themselves out of that short position and the unwind of that? So there's a lot of reasons to be long now, and really more reasons to be getting, you know, really aggressive in this area. But I want to fast forward this now, because again, this actually pulls back a lot further than you would anticipate going into the European number. So my thought is, right, I'm going to work my long, I'm going to try to hold on to something, and really if this starts to really release to the upside, sorry, this is at 4 times the speed now, then I'm willing to get quite, you know, aggressive on this trade and quite committed for the unwinding of that higher time frame technical play. But what happens is the market rotates all the way back down to 55s, which was kind of a good reference point for both the French and the German number. And I did a bad thing, you know, I covered just on the 55s after holding this small position, which is kind of unnecessary really. At least see yourself wrong if you've held, you know, a 20-25 tick squeeze from the highs. But, you know, at this point, I'd been up on the French, I then got destroyed on the German to start with, I then made it back, and now I'm giving back, you know, what I'd been up after that. So I think by the time I got all the way back down to 55s, I was pretty much flat on the day and pretty exhausted by 8:45 in the morning, really. So, you know, as much as I don't want the kind of, you know, emotions or psychology of it to affect my trading and stop me being objective, the reality is that when you've had some 3 pretty big swings in the space of half an hour, it's quite hard to not necessarily do that. So, you know, I didn't let it get silly. I tried adding in where I felt like the bid was holding, but then as the offer just kept stepping down more and more, I do work myself out of this position and don't really do any significant damage. You know, I don't get ultra stubborn on this trade, whereas maybe in reality, knowing that your risk was at 55s, you just kind of want to see this make a low and then start to get quite aggressive from there. So, you know, I still feel like this should rotate higher and take the highs, willing to have a look at working the bid, but the offer just seems to be stepping down. You know, I'm not getting filled easily on the offer. There's no prices that are consistently holding, and everything just keep on seeming to rotate lower. But at this point, you're thinking very strange price action. But also, this is the S&P. We've got equities pushing higher. You know, so maybe there's a little bit of risk off coming in. We've got T-notes, which are also kind of relatively close to the low. But anyway, I pretty much puked my last lot at the worst price before this starts rotating back up, going into the European number, which I'm going to flip to now. So this is the overall European number, which, as I said before, you know, it's often if it's been a beat on the French and a beat on the German, then I don't really want to trade the European number. If it's been a miss and a miss, I don't really want to trade it. But we're in this situation where the market had pulled back quite a bit. We didn't really know where the market wanted to go, but we felt like there's a lot of participants who've traded within this kind of, you know, area, maybe a 20 or 30 tick area. And also leaning on that technical structure, I kind of felt like if it did come in as a miss overall, and we did start to trade up through these 70s, 75s and the high of the day, you know, I wanted to be long and I wanted to kind of get something out of this. But in reality, when we watched this back, I was kind of quite exhausted and I didn't really get, you know, the size away to really take full potential of this move, which probably stemmed from not getting big enough on the panic kind of reversal trade at the tail end of the German. You know, it's funny how these things can kind of affect you. And really, I just didn't want to turn today into a bit of a disaster when every time I think I know where the market's going, it keeps coming back into range and coming back to 55. So a little bit confused, but as the sort of price action shows its strength, as we're going to see now, I do get something out of the long, which is probably the best move of the day when the European numbers come out as a miss per that image that I just had up on the screen a minute ago. So starts to take the high and actually showing some real good price action here. Sorry, I'm just going to take this back because I've got it at 4 times the speed still. And I want to do it at normal time because it wasn't as quick as the others. So just to show again, small beat on the European manufacturing, but a miss on the services and a 0.6 miss on the composite, which really this number for me for the European is quite important as it's more of an average. So just watching this again, counting down 5 seconds till the data. Again, pay attention to what the euro does. So the euro starts to offer, bund starts to bid. I actually get in and then, I don't know why, I just kind of, when 70s went offered again, I just got out and then realised that I was right and was willing to chase the price up a little bit and get back in. But really wouldn't want to see it back below 70s at this point. It starts to build up a bit more steam. You know, I can see euro offering down a little bit, willing to get a little bit more in, but only get up to 6 lots, really the way that I'd executed throughout the morning. You know, 9 to 12 again should have been more of a target for what I wanted to get in. And in fact, that's just a shame that by the time this really starts to unwind, I'd already worked myself, you know, quite measured and quite prudently out of the majority of my position where I was only holding you know, a one lot for the last kind of 10, 12 ticks of the move. But as I said before, you don't really know when these are going to move, and we don't normally set huge targets for the European number. But again, this is a bit of a lesson to me as how the lead up can influence the potential resulting move that comes out on the European number. It's not always null and void and a bit of a non-event. So, you know, at this point, I've depleted my size too much to really be able to start working any more in, because the worst thing for me that I could do now, which I regularly do, is hit another 5 lot up here, instantly go 5 ticks offside, you know, puke with my biggest size in the trade, which is just not the right way to do it. But really, as long as the Euro keeps making new lows, there's a good opportunity here to stay with the trade for as long as possible. And I think we trade sort of up towards these double O's area, and then through the remainder of the morning, we work ourselves up. You know, I think up to sort of 1922, so there's a level that's taken after a long kind of grind into the afternoon. But this is where the unwind of that technical position really comes into play, and really the cleanest move. You're never really offside in this position, and you can see, you know, them taking prices bid, holding, reloading, and then taking the next price, you know, taking out the next price, and the rotations are pretty tight. It's really what you should quite like to see in this situation. Anyway, I'm just going to quickly fast forward just so you can see the remainder of this move before the first decent pullback. You know, so I'm trying to work the pullbacks a little bit, just missed a fill. Euro's just taken out another daily level at 67s. And really, I think I'd highlighted around kind of 01s, 02s as a first place where this might hold. But anyway, I'm going to leave that there because I've got a few more points that I want to make as we go over the chart. So just to take a look back at my plan, I think in all, I kind of executed very well to my plan, and that's how you've got to consider how you did, because it's all very well being like, oh, well, you know, I sold into the lows and it pulled back and I got destroyed. But if that was your plan to do that, then, you know, the only thing you can do is reflect on it and adjust your next plan accordingly. You know, the worst thing you can do is be really flippant about your execution in the moment without having any real reason for doing so, other than, you know, you're losing, or, you know, you've gone from up to being down, or vice versa. You know, so I held from the French into the German, that didn't work. And then I did try to hold for that upside move after the German, but unfortunately it just dragged all the way back 25 ticks before it went, which sometimes it does just happen. But as far as anticipating the blip and distributing some smaller clips, I think actually it was probably a very effective execution strategy for this event, or, you know, combination of events, because had I not done that on the German number, I probably would have been 10 or 15 or maybe 20 lots short from 37s, and I would have got absolutely destroyed to the point that there's no coming back. So, you know, there's arguments for and against as to what you could miss on the time that it does roll over, but I think as long as you're consistent in your execution, you can work your sizing accordingly and find a way to grow if you get confident with applying that strategy. But otherwise, here just a quick recap on what happened. So, you know, beat on the French, we offered down and then just pulled back a little bit too far. Big spike down on the German before reversing and coming back here. But then again, another kind of long pullback into range before the European number was finally the one to set us off. And I think from where that European number came out, we bid up to around, I think it was around 30s by the close of play on Friday. And you can see here on the 60 minutes we saw before, you know, it did tie in quite nicely to this technical break, other than this pullback on this spike, which is where I was holding, trying to get long after the German. So just to sum up a few key takeaways, you know, if it really doesn't feel right and you've hit some bad prices, you know, always have, you know, that thought in your mind, what have I missed? Because being stubborn in that situation, it can just cost you so much, and it kind of can negate all the profits that you might have taken out the market on the other PMIs where it had done what you'd expected to happen within that pattern. And for me, just try to take note of some of the key identifiers for how the market's not necessarily that willing to move lower. In that situation, the pullback on the French number was really a good indication of that. And then thirdly, sacrificing your stubbornness, it can offer such a good opportunity for where you think the day's done and over and done with. If you still feel like there's a lot of people who are holding firm who still need to puke those positions, then there's the potential for you to cut and reverse and really take a fast move as everyone really starts to feel a lot of pain from the heavily trapped guys who've sold into those lows, thinking that it should just roll over and do what it's done on some of the others based off the manufacturing number being a beat for Germany. And fourthly, I talk about this a bit, the cycle of patterns, and we can talk about patterns and I can say, oh, every time it does this, it does this, it does this, but in reality, the way a lot of these patterns work is they follow a bit of a circular pattern where they become very obvious. The more obvious they become, they eventually get to a point where everyone takes the same trade, they all get trapped in the same position, and there's like a resetting of the pattern as everyone gets destroyed on the same trade. I see it across multiple different markets and types of patterns that we consistently execute on. And you've got to think the market's always adjusting to kind of acknowledge the newest pattern that's out there. So really it's just something that's worthwhile building into the back of your mind when certain key reference points that you've analysed and set out before the data point in this situation has even come out, i.e. for example, the 52s or 55s in the bunds on the pullback. If you've got these kind of clear lines in the sand where the market shouldn't trade above them, you have to be willing to accept that the pattern can break down. And if you're the last person to puke, you're going to take the biggest loser. So use that when it does happen to understand, the psychology of the market, in that everyone has seen this happen consistently, where the French number's been a beat and everyone sells into the German, and then the German's a beat and there's a continuation, or the vice versa for the miss. Anything that becomes that obvious effectively breaks down at some point, and it's just understanding when that's happening to really limit the kind of the loss that you take, which could counter all of the winnings that you've taken out of the market on the prior times that pattern's occurred. And then just finally, it's a bit of a kind of lesson for me where I'm always thinking, after learning off our elite trader, you want to get the biggest size in the market and take 2 ticks risk and go on side kind of immediately, and you work yourself out, and that's how you can grow your size. Well, unfortunately, not all patterns really set up well for that. And unless you're willing to sit offside with big size, which as a junior trader, you just can't really afford to do, for certain high volatility scenarios, you might need to adjust your execution accordingly. And actually, as you kind of get more confident and more disciplined and structured with your execution in that sort of environment, it gives you the opportunity to grow your size as your confidence grows. I didn't make much more on either ones of those swings than I probably would have done if I would have hit my first clip as a 10 lot. Because chances are, hitting a 10 lot and going 5 ticks offside, I'm going to be kind of getting out of 5 lots because I'm thinking, I can't afford for this to go another 5-10 ticks. So you've got to kind of acknowledge your own risk tolerance and be realistic about it, and also be realistic about what type of price action you're expecting to see. From the PMIs, you always see a blip like you might see on non-farm payrolls or something like that. Then know that you're probably not going to be hitting a good price when you do start to work your entry, and adjust your execution accordingly. So I'm not saying that it was flawless, but there's certainly some things in there which showed quite kind of disciplined and structured execution, which really is all we should be aiming for. Because once you've got that in the bag, you can really use that as a good foundation for growth overall across all of your trading. So hope that's been useful for you. Trade well, and I'll be back in a couple of weeks with another stream. Cheers.